There is this thing called CRS that is destroying your banking privacy. But there are still some countries today where banks don't automatically report your account details to your government. Some call them the last safe havens for financial privacy. But is that really true or just a dangerous illusion? We're going to talk about it today. Hi everyone, it's Irena here from Millionaire Migrant. Here, we don't just talk lifestyle, we live the lifestyle. I'm pretty sure that every employee of Millionaire Migrant has more than a couple of bank accounts, has more residencies and more passports than some random person would have. We test every product before we talk about it. So today we're talking privacy in banking, which I'm going to tell you just a sneak peek. It doesn't exist. So to understand this, we need to talk about the CRS, which is the Common Reporting Standard. We talked about this a bit more in the recent video. You can check it out over here. But today, we're talking about the other side. Can you really bank in a non-CRS country? So what's the CRS? CRS is the initiative launched in 2014 at the request of the G20. So its mission is pretty much to end the global tax evasion by making banks report information about the account holders, usually non-resident account holders. Over 118 jurisdictions signed the CRS agreements, including some of the very big financial centers like Switzerland, Singapore, Cayman Islands, entire European Union, and others. There are a couple of countries that didn't sign, which we're going to talk about in a bit, but the one major exception is the US. Why is that? So instead of the CRS, they use FATCA. FATCA is basically a law that forces all the foreign banks to report on US citizens, yet the US doesn't share the data back to your home country if you open an account in the US. Which is why if you're a US citizen and you try to open a bank account in some foreign country before without having a residency permit there, you often have difficulties or it would take a long time. We have a colleague who is a US citizen who it took her more than 3 months to have a bank account open with residency permit, simply because banks are afraid of the US and of FATCA as well. But however, keeping in mind that the US uses FATCA and not the CRS and doesn't share data back, that pretty much makes the US kind of a de facto non-CRS country. So if you bank in CRS, what gets reported? Again, we talked about this, but just very quickly. The personal details, your name, address, tax ID, your account numbers and your bank details, your end balance, so year-end balance, and income like interest, dividends, capital gains, and others. So all of this goes from your bank to your tax authority, to your country of residency. So it's all reported like that, automatically once a year. For example, a French resident with an account in Singapore will have that account reported to French authorities every year. That just tells you that pretty much within the CRS, there is no privacy. However, not every country signed the CRS agreements. There are still a couple of countries that are non-CRS, and those would be US, the one that we mentioned before, Serbia, Vietnam, Philippines, Paraguay, Egypt, and a couple of African countries like Algeria, Botswana, Namibia, and others. There are more as well, but these are some of the regular ones that pretty much everybody knows about. So on the surface, this looks like a golden ticket to privacy. Open an account there and your data isn't automatically shared abroad, so you're safe, you keep your money out of the CRS's eyes, of the tax authority's eyes. But here's where the myth unravels. Privacy in non-CRS countries is relative, but not absolute. Something that you need to know is that non-CRS countries doesn't automatically guarantee secrecy. It just means that there is no automatic reporting. So automatic reporting is where pretty much CRS has all the info and they connect the dots about your income from here, income from there, dividends from here, interest from here, and informs your country about it. But non-CRS just means that it's not automatic. It doesn't mean that they're not sharing it. Many non-CRS countries still have tax information exchange agreements or double tax treaties with the OECD members. So under these, let's say that, for example, if France suspects some of the undeclared income, that you didn't declare all of your income, or has a tax audit case, they pretty much make a request to the non-CRS country. And that country can then provide all the information that they requested and pretty much do the reporting like the CRS would do, only not automatically, but manually. Another point is that globally, anti-money laundering and anti-terrorism finance laws do apply that force banks to do the due diligence and to report suspicious transactions. In some non-CRS states, very important to mention, is that banking systems are much weaker and riskier and more prone to corruption or instability. Believe me, I can talk about that. Coming from Serbia, I know what corruption is and instability, and Serbia is a non-CRS country. But wanted to say that history gives you a warning. You can do your research and you can see what happens with Swiss banks back then. Swiss banks were once untouchable. They were the best secrecy that you can get, right? But under US and international pressure as well from the EU and others, the decades of secrecy collapsed almost overnight. So if it can happen in Switzerland, I believe it can happen pretty much everywhere. So why do people still use non-CRS banks? Legitimately, to diversify, to do business in those regions, or to protect against political risks and others, but illegitimately, to hide untaxed assets or to exploit reporting gaps. But make no mistakes, the era of truly hidden money is gone. Today, it's all about the legal structuring and not the secrecy. The walls are closing in a lot of countries. So countries like Armenia, Tunisia, and Senegal are scheduled to join the CRS. Georgia was not one of the CRS countries. They became one in the last year or so. The OECD's next move is the crypto asset reporting framework, which again, we talked about as well. There is a special video where Jeremy talks specifically about this. Make sure to hear it out. But that means that crypto will be reporting the same way as the CRS reports the bank accounts. So to answer the question, are non-CRS countries still private? The answer is only on the surface. In reality, the true secrecy is disappearing very fast. And that's what we do here at Millionaire Migrant. We have a lot of clients that we help do these legal structures that would show them, that would keep at least some part of privacy there instead of relying on the banks and the other systems, right? We also do help with the citizenships, the residencies, the bank account openings, the companies, the trusts, foundations, real estate, and many more. We create for you a blueprint that's only made for you and nobody else. We have series of calls where we explore your goals and put together that blueprint together, you and I. And then after that, we help you implement it. So if you want to stay ahead of these shifts, subscribe. If you're worried about the privacy, you can scan the QR code and let us talk and see if we can help you. If nothing, just put a like on the video, and thank you for watching, and I'll see you soon.